You've marked the order block, the FVG, the breaker. Price has returned to the zone, and now you're sitting there watching candles form inside it, and you still don't know if you should enter. You know the where. The problem is the when. This is the zone trader's dilemma. Phase 2 gave you the locations. Phase 3 gives you the triggers. And it starts with 3 specific candlestick patterns that tell you institutional order flow is defending that zone right now.
Phase 2 taught you where. Phase 3 teaches you when. A zone without a confirmation candle is a location, not an entry. You need both. The zone tells you that institutional interest exists at that price level. The confirmation candle tells you that institutional order flow is actively defending that level right now, in this session, on this candle. Without the candle, you are speculating that the zone will hold. With the candle, you have evidence that it is holding. That is not a small distinction. That distinction is the difference between a guess and a trade.
Pattern 1, the pin bar. A pin bar is a single candle with a wick that is at least twice the length of the body, with the body closing in the upper half of the candle's total range for a bullish setup. The wick is the story. It represents price being pushed into the zone, testing institutional levels, and then being rejected. The small body near the top tells you that by the time the candle closed, buyers had completely overwhelmed the sellers who drove price into the zone. 2 validation rules: wick at least twice the body length and body closing above the midpoint of the full candle range. Both must be present. One alone is not a pin bar. Pattern 2, the engulfing candle. A bullish engulfing is a 2-candle sequence. Candle 1 is bearish. Price moves lower into the zone. Candle 2 opens at or below Candle 1's close and closes at or above Candle 1's open. The body of Candle 2 completely engulfs the body of Candle 1. This 2-candle sequence represents institutional absorption. The bearish candle represents retail selling, or price being pushed deeper into the zone, and the engulfing bullish candle represents institutions absorbing every sell order and driving price higher with authority. The critical rule: wait for Candle 2 to close. Do not enter on an open engulfing candle. The close is the confirmation.
Pattern 3, the Inside Bar Breakout. An inside bar is a candle whose high and low are fully contained within the range of the previous candle, the mother bar. The inside bar represents a coiling of price, a pause in momentum where the market is accumulating before its next move. At an SMC zone, the inside bar suggests that institutional orders are being quietly loaded at that level. The confirmation is the breakout, the candle after the inside bar closing above the inside bar's high for a bullish setup. Enter on the close of the breakout candle. The stop goes below the inside bar low, giving you the tightest stop of all 3 patterns.
The golden rule of PA confirmation, the one that overrides everything else. The candle must close before you enter. Not when you see the wick forming, not when the body looks promising, when the candle is closed. A mid-candle pattern can look like a pin bar at 1445 and close as a doji by 1500. A mid-candle engulfing can reverse before the close. The pattern does not exist until the candle is closed. Write this on your monitor. Enter on close. Every time you feel the urge to enter a forming candle, you are gambling on the pattern completing. Wait for the close. It costs you a few pips. It saves you from the majority of false entries.
The Confluence probability ladder. Not all confirmation setups are equal. The quality of your entry depends on how many filters align before the candle forms. High tier. You have an order block, a fair value gap overlapping it, price is in the discount zone, and a pin bar has printed at the OB 50% level. All filters present. This is the highest probability entry configuration in the course. Medium tier, you have a valid OB and a bullish engulfing candle at the zone. Two conditions. Tradable, but watch the size. Minimum tier, any single zone with an inside bar breakout. Technically valid, but use reduced size and tighter management. Trade the high and medium tiers. The minimum tier is only for traders who are already profitable and comfortable with the pattern.
Invalidation levels, and these must be set before you enter, not after. For the pin bar, if the next candle after your entry closes below the zone boundary, the level the wick tested, exit immediately. The institutional defense that the pin bar represented has failed. For the engulfing candle, if the candle after your entry closes below the 50% midpoint of the engulfing candle's range, exit on that close. For the inside bar breakout, if price re-enters the inside bar's range after the breakout, if the breakout was false, exit immediately. The rule is the same for all three. Know your invalidation level before you enter. The trade is either right immediately or it is wrong. There is no such thing as giving an SMC confirmation trade more time to work.
Let me walk through a chart and identify all three patterns. Here on the 4HOB, price entered the zone and this candle formed. Long wick extending into the lower boundary of the OB. Body closes in the upper half of the candle range. Wick is approximately 3 times the body. Pin bar. Entry on close. Stop below the wick tip. Further along, price entered this FVG. The first candle was bearish. Price pressed lower. Then the second candle opens at the bearish close and closes above the first candle's open. Engulfing. Entry on close of candle 2, stop below candle 1's low. And over here, an inside bar formed inside the OB. Small range contained in the previous candle. Then the breakout candle closed above the IB high. Entry on close, stop below the IB low.
The 7-step confirmation checklist. Use this before every entry. 1. Identify the SMC zone, OB, FVG, or breaker. 2. Wait for price to return to the zone. 3. Watch for a pin bar, engulfing candle, or inside bar breakout. 4. The candle must close before you enter. This is non-negotiable. 5. Your entry and your stop go on the confirmation candle, not on the zone boundary. The candle is the signal. The zone is the context. 6. Check your confluence tier. Only trade high or medium setups. 7. Set your invalidation level before you enter. If you cannot define the level at which the trade is wrong, you are not ready to enter. All 7 steps, in order, every time.
Here is everything from video 9 in one place. 1. 3 valid PA confirmation patterns. The pin bar, the engulfing candle, and the inside bar breakout. 2. The zone gives you the location. The confirmation candle gives you the timing. You need both. 3. The highest probability configuration is OB plus FVG plus discount zone plus pin bar, all 4 filters. 4. The candle must close before you enter. No exceptions. No mid-candle anticipation. 5. Always set your invalidation level before entering. If you cannot name the level that proves you wrong before you enter, you are not ready to enter. Phase 3 continues with video 10, the full top-down framework that connects every concept in this course into one complete workflow. Here is everything from video 9 in one place. 1. 3 valid PA confirmation patterns. The pin bar, the engulfing candle, and the inside bar breakout. 2. The zone gives you the location. The confirmation candle gives you the timing. You need both. 3. The highest probability configuration is OB plus FVG plus discount zone plus pin bar, all 4 filters. 4. The candle must close before you enter. No exceptions. No mid-candle anticipation. 5.
Always set your invalidation level before entering. If you cannot name the level that proves you wrong before you enter, you are not ready to enter. Phase 3 continues with Video 10, the full top-down framework that connects every concept in this course into one complete workflow.